Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 5th, 2025, and we're diving into the latest earnings report from Old Dominion Freight Line, one of the largest North American LTL motor carriers. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Old Dominion has just released their fourth quarter 2024 earnings report, and there's a lot to unpack, from revenue figures to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Old Dominion reported a total revenue of $1.39 billion for the fourth quarter, which is a 7.3% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily due to a decrease in LTL tons per day, which fell by 8.2%. Despite this, Old Dominion managed to maintain a strong operating income of $334 million, although it was down 20.7% from the previous year. Their operating ratio increased to 75.9%, indicating some pressure on margins due to the revenue decline.
And what about net income?
Net income came in at $263 million, down 18.5% year over year. This reflects the challenges posed by the softer domestic economy, but the company has managed to maintain efficiency in its operations.
EPS performance and analyst expectations. Old Dominion reported an adjusted earnings per share of $1.23, surpassing the analyst forecast of $1.60. John, what does this tell us about the company's performance?
This is a positive sign. Beating the EPS forecast indicates that Old Dominion is managing its costs effectively and maintaining profitability despite revenue challenges. The fact that they exceeded expectations set by 8 analysts shows resilience in their financial management.
How significant is this EPS beat for investors?
It's quite significant. It suggests that the company is navigating the current economic headwinds better than anticipated, which could bolster investor confidence and support the stock price.
Strategic initiatives and future outlook. Old Dominion has announced a 7.7% increase in their quarterly cash dividend. What does this indicate about their financial health and future outlook?
The dividend increase is a strong signal of confidence from the management in their long-term strategic plan. It shows that they are committed to returning value to shareholders, even in a challenging economic environment.
And what about their capital expenditures and share repurchase program?
For 2025, Old Dominion plans to invest $575 million in capital expenditures, focusing on real estate, service center expansion, and technology. They also utilized $967.3 million for share repurchases in 2024, which underscores their commitment to enhancing shareholder value. CEO Marty Freeman expressed confidence in their ability to produce profitable growth and increase shareholder value.
Risks and challenges. Despite the positive aspects, Old Dominion faces several challenges. Can you elaborate on these, John?
Certainly. The company is dealing with persistent economic headwinds, which have impacted their revenue and operating ratio. The operating ratio increased by 410 basis points, partly due to a deleveraging effect on operating expenses. Additionally, insurance and claims expenses rose by 100 basis points, adding to the cost pressures.
How might these challenges affect their future performance?
These challenges could continue to pressure margins and profitability if the economic environment doesn't improve. However, Old Dominion's strategic focus on efficiency and cost management should help mitigate some of these risks.
Key takeaways. In summary, Old Dominion Freight Line has shown resilience in a challenging economic environment, with a notable EPS beat and a commitment to shareholder returns through dividend increases and share repurchases. John, any final thoughts?
Old Dominion's strategic initiatives and efficient operations position them well for future growth, despite current challenges. Investors should keep an eye on their ability to navigate economic headwinds and maintain profitability.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Old Dominion's performance in the comments below.